thoughts are on the relative values and headaches that were brought in by IMs, IDs and NEDs, interim managers, investors directors, non-exec directors, that basically the funds are putting onto the investee company?
Depends who you get.
Yeah, I can kick off with that. I'm actually really proud of the investment team I put together, and I had no qualms with the investor directors that joined the board. I think they're a brilliant asset. I talk to them daily, if not I don't talk to them 2 or 3 times a week, if not daily. They have a tremendous amount of expertise. I think it's about, like I said earlier, it's about doing your due diligence on them, making sure the fit is right. If you've got that luxury, maybe you don't. Maybe you need to raise money quickly. Circumstances dictate maybe what you can do there. But I've had a very beneficial, and I would say they're mentors as well. So.
Are they exec or non-exec?
They're exec.
I suppose from a sort of VC perspective, what I think is absolutely fundamental for you all to know is exactly what you need and where your holes are. Mm-hmm. So when they do start suggesting people to you, mm-hmm. you have a very, very clear idea of whether that person actually matches the needs that you've got. So again, coming from a sort of larger VC house that 3i was, it was part of our commitment to our investment committee that we needed to find non-execs because that ticked a box to a certain extent. And so what we tended to do was go, okay, well, we need that. Let's put someone on rather than put someone on that was really, really appropriate. And if you know what you want, you can then say, no, that person's not appropriate. I need someone like this. Mm-hmm. And as an investment manager, I go, oh, okay, that helps me more about who I'm going to find. So really do understand, I think it's what Tom said right up front, know what you don't know, and in effect scope out the kind of non-exec or mentor that you need, and then you'll probably find the most appropriate person.
I think just to add to that, I mean, it's important to know whether an NED is coming in because of corporate governance issues, for example. You know, there may be a feeling from the investor that the company actually hasn't got that right, so they're bringing a certain person on board, or it may be to open up a new market by bringing in a Rolodex of contacts in something related, but not specifically that you're in. So yeah, it's knowing what's required and how that person's going to help. And again, it's back to this issue of team. You're going to have to be working with these guys, so it's very important that the chemistry is right between you, because you don't want a fragmented board. That'll just kill the company.
I think I'm very much in favour of non-executive directors. They give you an outside view looking in, against which you can test what you're doing. I think, bear in mind that non-executive directors dip in and out, and they're doing lots of other things. So you do have to keep them informed. You're in the business every day. They're dipping in sort of every month or two. And you have to keep telling them things and retelling them things often, because they don't necessarily retain what you told them last time. The main thing to watch out for, though, I think, is to make sure they understand the nature of the business you're in and the benchmarks for its performance that are appropriate. If you've got somebody who's used to a different kind of business with different benchmarks and they're not seeing something that they're familiar with in your business, then they'll be constantly asking questions and there'll be a tension. The most valuable NEDs, therefore, I think, are people who know the markets into which you're operating and the benchmarks for your business. Coming back to angels, from my experience, if some of the angels, or one of the angels, actually comes onto the board as a director, and they've also got a shareholding in the company and got good connections, that can be very, very helpful, because they've got an outside view, they've got a vested interest in making sure that you succeed, and they've probably got a set of market contacts into your community that your company is dealing with. So I've had some quite good experiences with angels who put money in and then are actually on the board and then put themselves out to help the company.
Okay, I have one thing to add. Our angels often come to the board as observers, so they still bring their knowledge and they still contribute. So.
Yeah.
Just a follow-up, just exec versus non-exec. Do you have a view on whether, from a funding perspective, you need an exec and IM in place who's actually in there running it often? And from an investee perspective?
Well, I think from the point of view, I mean, all members of the board actually have joint and several responsibility for the board. So from a governance point of view, everybody is equally responsible. The question about whether they are a member of the executive team, that's, I think, a question of looking at the executive team, saying, does it have all the skills and capabilities it needs? What's missing? And do we need to put somebody in there to fill a gap? And if somebody does need to go in to fill a gap, do you put somebody in there on an interim basis, or do you get the headhunters going, or go and find somebody? I don't think you can make a generalisation about that. Personally, I'm not that in favour of interim posts. I have seen it work once or twice, probably best in the finance role. But I think it's a bit of a last resort, because that is an interim position. That person's going to go out of the company in due course. They're probably not tied into the long-term benefit. So I think it's a bit of a fix in the short term. Hope I'm not offending anybody.
Do you want to add to anything there, Justin, in terms of your non-execs and observers or anything?
I'm a bit exhausted, actually.
Just say no.
I basically put the presentation together this morning before I came here, and I relived 12 months of the fundraising process. And I make the best use you can of them. I don't think there's any fixed answers. I think it's what's appropriate for your situation. I'm lucky. I've got great investor directors. We're looking for a chairman. In the shareholders agreement, we have a provision for 2 more non-execs. One that I can pick and one they can pick. But we're not in any rush to bring anyone on board. At the process is now, it's a collaboration. That might change in the future as we scale. One thing that I think is really important to discuss with the investor directors is if they're planning to leave the fund, or what happens if they step out, and who will replace them, because I think that could change everything. So that's a good thing to talk about.
Okay. Question there at the front first, and then behind.
I would like to ask for critical factors that allow a VC to evaluate the proposal, which is, let's say, the case, are you stay close to the business plan, or you add extra details on that?
Oh, you're asking Jason, are you?
No, he started. He's asking you,
I think that's good.
Yeah. So what do we look for in terms of how do we validate a business plan? Is that again, all sorts of things. A lot of what angel investors do that will tend to have experience in the sector, so they'll be able to do their own validation by their own knowledge and experience. A lot of VC houses rely on residents, entrepreneurs in residence, or advisors, or use their own network to start validating the market. So things like ringing up one of your customers will be a key validation point. If you have customers, looking at the market size, that's about again doing the research. But we use a bunch of advisors to help us validate the marketplace and the business plan.
Such details, for example, we tell as customers, what else, let's say, add value to our value proposition?
Oh, what adds value to what you've got?
Yeah.
The key thing is whether you've made any sales. So are you pre-revenue, or have you made some sales? Because if you've made some sales and somebody's dug into their checkbook in order to buy what you've got, that is a tremendous validation of your proposition. If you haven't got there, then it's, have you got contracts to deliver? Have you got letters of intent? Getting sort of progressively weaker as you go further back up the chain. You've watched Dragon's Den. I've got a contract for this. Can I see the contract, please? Hang on, this is a letter of intent. They haven't said they're actually going to buy it. So you need to represent what you're offering the investors correctly and not overstate it. But having actual customers who've paid you money is the biggest thing that will point at which your value will go up. The point about have you got a defensible proposition, so have you got patents, what have you got that is going to slow down or stop a larger enterprise just coming along and saying, oh, I think that's a good idea, I'll copy that, and then putting all their resources behind it and doing you out of business. So the ability to see that the proposition is defensible is important. And the management team, as I think we've said, the more clearly the management team is capable of doing what it's doing, going to do and knows its industry, those are the things that I think increase the valuation. And from that point of view, if you've got somebody on board who's done it before, who's raised money before, taken a company through its development cycle and then knows how to exit through a trade sale or whatever, that is an asset which confers some value on the company. Okay, what else? Size of the market. The bigger the market that you're going for and the faster it's growing, by and large, the more that investors are prepared to take on the risk that's involved, and therefore in this trade-off between risk and value, they're prepared to offset some of the risk against value.